Welcome back, everybody. It's me from the future here to talk about Tesla. We are on the 1 week chart. So looking here at the Bollinger Bands on the 1 week chart, we definitely have some room to move up. We are still in a posture of that upper range for the Bollinger Bands, leaving plenty of room on the lower range if we decide to come back down at some point. With the Bollinger Bands, we tend to stay in the upper range during a bull run and then find ourselves in the lower range during the bear markets. So interestingly enough, we are up here in the upper range with room to move up. But in the past, when we've done this, we always find ourselves coming right back down into the lower range. We had the top, we had another point when we were up in the range, always moving back down. Simply put, we're just zigzagging in this Bollinger Band range in the 1 week chart. So we have the simple moving averages here, the 200 week finding support, the 100 week in the orange is our upper target if we find ourselves blasting up. The purple 50 week moving average is definitely coming down hard and will likely push us down to that next low. Again, this is the weekly chart. So every single candle that you see represents 1 full week. So looking at some trend lines, I've lined up a few things here for you to make it a little easier today and quicker, more efficient. We see a channel, again, similar to the Bollinger Bands, where our price is ping-ponging around in. What this shows me is that we have a little bit more room to move up only before we end up coming right back down and finding a floor again. Okay, it's similar to these past movements here. So here was our top. We found our way, we had a double peak top, and then we found our way down. Here was our second one. We came straight up, touched the top of the channel, came straight back down. And our third one was the big one. We came up, found our way up. There was kind of a double peak here, almost a triple peak, but we did touch that top of that channel and came straight down. And now we find ourselves in our current motion, and that's right here. What I believe is going to happen here again is we're going to find ourselves up, touch the top of this channel, and then move back down. Again, this is the 1 week chart. Our lows over the next weeks to come into June, 115, 116, and of course below sub $100, somewhere around $93, okay, is our bottom floor. These two lower trend lines are long-term floors which have supported in the past the history of the price, okay? So again, they're very valid in terms of coming back down and finding a support before we move out. Okay, since this is such a strong channel, it is very evident to me that we will just simply find ourselves pinging around in here for a little longer, whatever it might look like, until we get squeezed out and find our way moving up. In terms of that macro view for Tesla, we can do something like we see here, where we find ourselves moving back up and the price continues up to all-time highs over the months to come into 2024, 2025. But another scenario, rather than blasting out of this channel from this floor, we could find ourselves doing something similar to this. Let's continue with this same move where we find resistance. We come back down. Okay, and then we move up, but we could find ourselves just kind of bottoming out for a little while before we move up. That's another scenario as well. So one other quick item to look at is the Fibonacci's from our last top to bottom. So when we hit that local support back in early January, at the very start of the year, we came back up. We actually blasted through the 238 Fibonacci. We blasted through the 382 Fibonacci. And we finally found resistance up there at the 0.5, which is pretty amazing, actually. There was such intense selling, mostly due to Elon selling off his stock to purchase Twitter. We blasted through 1, 2, and then finally found resistance at the third Fibonacci retracement. So I don't see us moving past that again, looking at this retracement. So I did point out a possibility of something like a 220, but looking at the Fibonacci's, it might be something more like a 207 before we come back down. So again, Fibonacci's are typically pretty accurate. I mean, you see how we've respected them for the most part, but we're also respecting this midterm trend line that we have here that's been ongoing. So again, we could find ourselves moving up, and down, or we can find ourselves moving all the way up and then down. So we're really just going to try to stay in this channel. I mean, let's respect the channel with the price movement. We'll amend this to more like a 208, 207 as a high short term, and also our lows at around 118 and sub 100 and like the $92 range. Okay, so I think that does it for the Tesla price. I think we have some pretty solid targets up and also some bearish targets below. Okay, let's take a look at Block with the ticker of SQ. This is definitely one of my top 3 stocks currently. It's a great tech stock. I've done some videos on this in the past. Let's take a look at where the price might be going. We'll start off with the Bollinger Bands. A little bit different from some of our other tech stocks. We're finding ourselves at the bottom of the Bollinger Bands channel on the 1 week chart, which tells me that we are likely going to maybe find ourselves back up to the top of the channel in the near future. So, you know, for a short-term buyer, maybe it's a good idea to be buying here, but we do have some room to go down. If we do, that would be in the upper $50 range. Now, looking at the simple moving averages, we have our 200-week moving average, which we are well below, and this is quite bearish in my opinion. In the orange, we have the 100-week, which is actually coming down and about to cross that 200-week. In my opinion, quite bearish. And then finally, we have the 50-week simple moving average, which is crushing the price. Kind of an ugly picture here for us. Now, what can sometimes happen in these situations, especially when you're looking at crypto, we could find ourselves with some type of short squeeze where we've come up and literally blast up to this $130 mark. But again, this is not a crypto, so we probably wouldn't see ourselves do this. Let's take a quick look though. I'm curious to see what the 1 day chart looks like, because that will tell a little bit of a different story. As you can see, it looks a lot different. But that one week chart is what we typically are looking at on this channel, is more of the midterm to macro view. However, let's take a look. So same simple moving averages simply on the 1 day chart. We are still looking interestingly bearish at the moment. But similar to the 1 week chart, every single one of these moving averages are above the price, which is not a good sign. However, that short squeeze possibility is still there, where we could find ourselves blasting up into this $70 range. Okay, currently we're at the $64 range. So if there's any type of short squeeze that could occur, it looks like it could be somewhere in this vicinity right now. Okay, so looking here at the trend lines, we put together a few scenarios here which might make a little bit more sense for the price of Block. As you see, we do have our lower portion of this bearish pennant. What I'm trying to decide here is where is the top of the bearish pennant. We have 2 different options. We have this option, which looks pretty nice in terms of the clarity of a bearish pennant. It is quite a long pennant, so we could find ourselves really ping-ponging in this pennant for a long time, right into towards the end of 2024, according to this chart. So with that said, I have a secondary option, which is this upper trend line. So we'll make that apparent. We do have a ascending floor and then a descending top resistance. With this particular pennant scenario, we will find and resolve. All right, so when you're talking about a pennant in a downward trend, similar to what we're doing here, we have a downward move, big downward move, and then we just find ourselves kind of ping-ponging in this pennant where the support is ascending, the resistance top is descending, and again, finally, it would resolve into a downward move. So that is exactly what's happening for this bearish pennant that we are drawing here, the 2 different options. So in this short pennant move, we would resolve and find ourselves breaking through probably soon, right? Over the next month, where we move up, maybe ping pong 1 or 2 more times, and then find ourselves down hitting one of these floors. This is kind of where I think the price should be going. Again, we have this red trend line at the bottom, which is our floor, our ultimate floor. And that really kind of falls right at 40 bucks, 40 something and 40 and change. And that's very similar to maybe a secondary scenario where we find ourselves ignoring this upper resistance and continuing up in this kind of a fashion, something like this, right? Okay, where we just continue ping-ponging for months and months into late December of 2024 before we finally resolve. That's another option. And where would that fall? Not too much farther from where we talked about before, you know, $45. So it's really in that lower 40 range to the mid to upper 40 range. So, you know, let's say the range is like 41 to 48, you know, is for in terms of a lowest low that we could see emerging from this bearish pennant. All right, so let's take a look at some Fibonacci extensions to see where we might be going. We've got our Fibonacci extensions. Again, we are squeezed down here. If we happen to break out of this pennant, which is not very likely for a bearish pennant, we would find support immediately at $88. So in a bullish sense, that would be our target. And we can kind of draw that out very quickly. Perhaps we ping pong through like we talked about. We break out. Our first line of resistance would be around $73. Our secondary resistance point would be around $88. And that would simply be more like almost a double, triple top here, okay, before we end up moving back down. So those are your targets there. Something like a, you know, mid 70s to mid 80s for our bullish scenarios. What I want to do is pick it up at these low ranges and then ride it into the next bull run. So that next bull run could find us, you know, hitting one of these lows and moving on up. This is a strong tech stock, and I think it's got a really good future with the Cash App and also with Lightning implementation, with stock trading within the app, with availability to Bitcoin. This is a great tech stock. All right, let's take a look at Coinbase with the ticker COIN. We'll start off with the Bollinger Bands. We're looking pretty healthy here, still working out in the upper range of the Bollinger Bands. Of course, that always means that we have room to come down at some point and revisit this lower range. Slightly bullish. We see that the mid-range is starting to curl up. So this is a good sign for Coinbase. Will it be temporary, or will it be more of a midterm long range move up? Okay, then let's take a look at some of the trend lines. All right, so looking at Coinbase here, we are on the 1 week chart. This is outlining a falling wedge for us. I can see the price just finding its way through this falling wedge scenario and then finally coming up and out. But when it comes to this falling wedge, we do have a secondary upper resistance point, which if we kind of brought out this lower floor, it would extend this falling wedge even further. You know, would probably not be very good news for our short-term traders, because it just means that we would find ourselves ping-ponging for a longer period of time before finally making our way out. Again, this longer falling wedge scenario would really bring us into the end of 2023 and into maybe Q1 of 2024 before we found our way out of it. And I think that's pretty reasonable. But the longer the wedge, the lower we could go. So, you know, that shorter scenario, we would probably find ourselves in the $30 range, $25 to $30 range as a lowest low. In this longer scenario that we're looking at here, we could even reach as low as like 17, 19 cents, something to that effect. Could. It depends. The longer we go into this falling wedge, the worse off it's going to be. But again, with this longer scenario, this longer falling wedge scenario, I think it is quite healthy, but it's also a great chance to pick up even lower priced Coinbase. Again, we are currently finding ourselves in resistance. We're really just pinned up at the top of the wedge. So again, when we finally make our way out of this wedge, we'll probably find some type of resistance at this upper trend line here. Okay, so let's take a look at our Fibonacci retracement. So we'll go from our high to our low. It looks like, yes, we are respecting these Fibonacci's at the moment, including that that God candle that moved all the way up to the 238. This is our upper range, but also look, it's lining up, of course, with our that upper purple trend line. But again, looking at the price, looking at this secondary wedge, I'm going to redraw that first wedge that we had. In this particular scenario, we would resolve quicker and find ourselves breaking out. But for this upper resistance line, it just becomes like a temporary resistance point, like a wedge within a wedge, and then we end up just breaking out anyways into the old wedge, the overarching wedge, and then finally breaking out. Okay, so let's wrap this up. I think again we've established some possibilities for low targets, in the $25 range in the short to mid term throughout the summer, and then also further out into the macro view would be more even closer to $17, $16, depending on what happens and how long we stay in this wedge, this falling wedge. And then our upper resistance as well. You just need to follow this upper resistance trend line here of the falling wedge. Currently, that's somewhere in the range of $78. But as time goes on, this is a pretty steep upper resistance. So we're going to find ourselves down at 65, 58 by September. By the end of the year, we're going to find this at more like $43. So again, a falling wedge this steep is pretty ugly. So let's see how it resolves. Okay, so I think that does it for the Coinbase analysis. Always remember to buy low, sell high, and never sell at a loss. Have a good one, everybody.